The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 20th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific Thursday. Let's make sure we do everything we can to have an extraordinary morning on the West Coast, afternoon elsewhere, and evening as well. Of course, the easiest way to do that is to always remember, folks, that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. We're going to go look at the circumstances, what the Bulls and the Bears are throwing out to us. Here, I'm absolutely honored by your presence. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Internationally, you can reach out at 727-445-1044. This is terrific Thursday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 260 points at 17,086. The S&P, she's down 32 points at 2048. You've got the NASDAQ Composite off 113 at 4906. Russell is down 19 points at 1183. The FTSE finished off 250 points. The FTSE down 35. Gold's up 25 bucks. Silver's up 32 cents. Platinum's up 19 bucks. Light sweet crude is flat. She's up 17 cents as we speak right now. Bonds are up. We've got a lot to take a look at. We've got currency pairs, euro, Japanese yen. That's been moving higher steadily. But let's begin with, hey, where are we at? Let's go identify some of these really key levels out here. Let's start by taking a look at, I'm going to switch over to the futures contracts, and we can switch over to the indices. I'll do both for you. Well, we'll go to the ETFs perhaps after this. That's what we'll do. If you're watching us on TigerTV, the screen that you are looking at is the daily contracts. We've got the NASDAQ daily contract in the upper left. Right-hand side is going to be the S&P futures. The lower left is going to be the Dow futures. Lower right is going to be the Russell 2000. Now, on the trading day, so if you're watching me, you can see my cursor. As I hit one candle, the cursor will go ahead and hit each of those candles. So the key day, one of the key days, in my opinion, and levels that we're taking a look at, inside the NASDAQ, inside the ES Mini, it's August the 12th. Why August the 12th? Well, the reason is because on that trading session, that set up hammer candles in each of these four indexes on the daily basis. Hammer candles, the meaning behind them, they are typically good spots where the meaning behind them is that the market is trying to hammer out a bottom. That, in essence, is where the name came from. You know the expression when you close below a hammer candle. If you're long, you're wrong out there. So we've got hammer candles across the board that are under attack. Let's start with the NASDAQ, which is down about 2% or so, and that's the one that is truly, really under pressure. So let's try to rip this apart. The key level inside the NASDAQ at the day's end that you're going to want to pay attention to is 44.31. That is the low of that hammer candle. We're pretty well below that. We're at 44.01 right here. There is nothing. Well, I can't say there's nothing. We'll go take a look at shorter-term charts to give some kind of indication if there's any other message of the market. But here's one of the things that you and I do know. Number one, you're below this hammer candle. Two, today, if we take a look at today's bar, as we speak right now, you've got a wide-ranging bar moving into the 0.786 retracement from its most recent highs out here. There was a bullish reversal signal right here. This is a morning star pattern from that's July 8th, July 9th, and July 10th. You see, this is, all about being able to pick battles out here. And all you and I are doing is we're going and we're evaluating who's winning those battles and where are these lines of support and or resistance out here. Now that price has moved into both the swing point, so it's testing the swing point low from July 9th. Let me get my data panel out here. It's going to be a little bit easy. The top of that, by the way, is 44.08. So it closed back above 44.08. We'll have to take a look at volume. Could be a rejection of a swing point, but we won't really know till the end of the day. At this stage, any close inside 44.08, the combination of all these says that the NASDAQ would go down and test 4331.75 out there. So that's in taking a look at the daily futures contract inside the NASDAQ. Same situation inside the ES Mini out here, and then its hammer candle is under attack. Price is well inside the swing point low, which takes you back to July 6th. The price point on that is, give me a moment here. The low of that candle session is 2034.25. Oh, shoot, I could have just looked at it because of the retracement level. Again, same setup, right? Wide-ranging bar coming through that 0.786 retracement level. Very likely price is going to go down and at least test that. That's on the ES Mini. If we go take a look at the Dow futures out here, again, same type of thing. Looks like a doji candle. It's a doji / hammer. That's from August the 12th. Now, in the case of the Dow, where she'll want to head to is all the way back down to the February 2nd, 2015 low. Price is trading inside that swing point. The low of that swing point, well, that's not on my screen here. The low of that swing point is 16,802. So you can see you got the 0.786 retracement at 17,111. Coming through that, closing below a hammer candle, says you're going to go down and test the next level of support. By the way, the hammer candle session low inside the Dow futures, 17,079. Anything can happen. As proof was yesterday, of course, we know that each and every day. Anything can happen, but these are the levels that you want to pay attention to. Depending on how today's candle forms, whatever forms out here, will give you a big clue as to what it wants to do next, it being the markets. If we go take a look at the Russell 2000, 10-minute delay out here, but we can see that it now clearly below the hammer candle low from August the 12th. That price point, by the way, is 1185.20. You're trading at 1182, probably a little bit lower because of the 10-minute delay, but right around there. Now, inside the Russell, you can see it's below all the swing points out here. That says that it could head all the way back to the January 16th area. Now, this is over time, 1165 to 1130.50. So the first and most important thing for us to identify and understand is we've got very key bullish candlesticks that are failing as we speak right now on the daily charts. Now let's go switch over. Let's take a look at the ETFs because not everybody has the daily charts or the daily has the futures contracts. But it's really important because we're going to shift back and forth in between the two. One of the reasons that we're going to do that, we're going to take a look at what's going on inside the NQ as an example on its 30-minute time frame out here. And if we take a look at that wild ride yesterday when the Fed minutes were released early, we saw a big bounce back where the markets got back to positive. And if we start from the high of that candle session, now this is the 30-minute time frame that you and I are taking a look at, what you'll notice is you'll see from that candle session to the low that we're in right now, we are in a seventh wave candle formation as we speak. Now, the NASDAQ is absolutely the weakest indice out here, the largest from a percentage standpoint loss. So on its 30-minute chart, it doesn't have to be a seventh wave, but it is in the seventh wave. It could be alternative counts, but we're taking a look at what it actually is as we speak right now. It's a 30-minute chart out here. At 2 o'clock would be the earliest time where you could see some potential reversal out here, some other type of bullish signal. So again, we're going from longer term, we're going from daily down to 30. Is there any kind of message? Well, we're also seeing price stretch to the lows out here, and it's doing it as we speak right now at 115 with less relative weakness. Look, the cure for that is lower price and more strength to the downside. On a daily chart, when we put this together, we're taking a look at that hammer candle on a daily basis, and we're seeing a wide-ranging bar. In essence, that's really its message. That's the overriding message. So the reason, because we wouldn't get these same counts if we just went over into the ETF structure out here. And again, just so we can take a look at, because, you know, from strength, we understand weakness, we understand what's going on. If we take a look at the 120-minute time frame chart out here, what you're also going to see this time frame. Now, this chart here, we're taking it from the highs back here at about 10 o'clock in the evening on August 17th. what's today, August 20th. So from 3 days ago, when the NASDAQ futures contract on a 2-hour contract made its high out here, you can see that it too, as we speak, is also in its 7th wave. So we've got 2 different swing points that we're using, 2 different areas where the market can have some significant and extreme bounces. So what does that mean? That says, hey, if you're short any of these instruments, what you ought to be doing is bringing your stops, adjusting your stops. Of course, it depends on which style of trading vehicle that you're using out there. But you really should be adjusting your stops. So, well, unless it's a very long-term positional trade, then you've got a different, then you have a different structure. Different trading plan. That's really what I should say. So we've got 2 different charts out there. We've got that hammer candle. You put the combination of the 30-minute, the 120-minute, and the daily. There's plenty of information to get an idea as to what the market's going to want to do, I would say, by day's end out there. If I go switch over, I've got a 5-hour chart as well. 5-hour chart not providing us with a whole lot of information out here with regard to price relative strength, with regard to waves to the downside. So we'll focus on the 30, 120, and the daily charts. Now, let's go switch over and take a look at what's going on inside the ETF structure out here. Let's take a look at, and let's stay with the NDX 100 in this case. Let's take a look at the Qs. What do we know about the Qs? Well, right now you've got volume of 34 million shares out here. Let me see if I can put my little calculator up. Oh, I should have had that just really set to that. But the idea here was just to take a look at some straight line math. There we go. So the Qs right now we're at 34.9. We've been trading for, we'll call it what, 9th, 10th, 11th, 12th. We'll call it about 4 hours. All right. So just for the heck of it. So 4, we've got 2.5 left. So 4 hours. That says you're going to do volume on a straight line basis somewhere around 56 million shares. Now, price is moving into a swing point, which is also, by the way, is a hammer candle. So on the ETF structure, July 7th is a swing point that's under attack. Now, that has 44 million shares. Now, straight line math is not necessarily the best way to gauge volume as far as what it's going to do at the end of the session, but it's good enough. It's a tool that we've got. As we speak right now, 46 million is going into, did I say 46? Did I say 57? I was wrong on that. It's 46.8 million. I'm sorry, 56 is the correct number. Let me delete this. I'm sorry. 56.7 to be exact. So you got volume moving into the swing point. You have today's session moving into the swing point with volume. But here's the deal. Here's the interesting thing, and maybe I'll try to do it during one of the breaks out here. The question is, as a percentage of outstanding shares, is this going to be the kind of volume that the Qs typically make at least a short-term bottom with out there? Qs make a bottom with volume. In fact, if volume really picks up, you get to 70 million, 75 million. That's your kind of washout to say that at least there's a bounce that would be in play out here. Lighter volume is actually more bearish. So if you're bearish out here, if that's the side of the trade that you're on at the moment, you don't want to see volume pick up. Trust me, you don't want to see volume pick up. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's continue taking a look at that. I mentioned something before the breakout there with regard to volume inside of the queues. So we take a look at the daily charts out here. We know the lines of demarcation, critical levels of support that right now are under pressure. We took a look at some shorter-term charts inside the NASDAQ, since that's where we're seeing the largest amount of pressure in the market. And then we went straight to the queues out here. Now, I'm going to show you a couple of charts. So just, today, a day like today, today's very serious. Now, the cool thing is, at this stage of the game here is I and my clients are neither long nor short. We were long an index position yesterday, and we were taken out of that index position for break-even trade. Where we've been long has been in the gold market, the miners market out there. So there's more than one way to be able to make money. Now, the reason that we're not short this market is because I've been anticipating, the market to move higher into next week. It's still a possibility out here, but things are getting a little bit dicey, quite frankly, for that to take place. When I say supposed to move higher, and I'm kind of switching a little bit here, going back and forth, but it's my show. I get to do that. Yeah, this is the cycle over the last 82 years, what the Dow does on average by day. And we're right in here. This low, this says about August the 10th or 11th, we actually saw, that's one of the candles that's under attack right there. So the market really was following the prescribed highs and lows, moving between critical swing points. The next critical one here is August August 25th. But, this low right now is under attack, maybe being taken out today out there. So I'll just simply come back and reassess things. But here's one of the other things that I do know with regard to Qs and the volume. See, I'll get back there pretty quick. Let me put this chart up here. I've shared this with you a few times. Slideshow from the current slide. There we go. Now, this happens to be the ETF for the Qs out here, and this shows the total daily outstanding shares. So we understand what the exact float is for the Qs. Now, what you and I know, because of my investigative work of wanting to understand, for example, why is it that the Qs are making lows with volume? What did that mean? Was there any reasons? Was there anything statistically I could go back and try to figure out? And then, in doing that work, I uncovered this scenario, which was exactly the number of shares which changes by day out here inside the Q. So it's a little bit of work that Stevie has to do. The reason that I wanted to go back is because what I had noticed was a year ago, 2 years ago, 3 years ago, the Qs were making lows with like 80, and you go back and look at it, 80 million shares and 75 million shares and so forth. And now we've gotten to where the Qs have been making some buyable bottoms, some bounce bottoms with like 55 million shares. And I was kind of scratching my head saying, what's changed? What has changed that 55 is the same as 80 was? Well, when I uncovered this, that helped me, that assisted me in answering that question. That then said, well, if that's the case, then I needed to redo my charts. In other words, using volume or trying to identify market bottoms, just using this and comparing the volume back, today, for example, at 36 million, is not going to be anything, if I go back far enough out here, like the volume with 82 million shares back in November of 2000. I've kind of lost the date out here, but where was it? November 2012, 13, somewhere right around there. So, we've got these high. So, but let's just do this. Yeah, I think you get the picture. I think I've explained it. Maybe this picture here will actually totally explain it. As soon as I find that chart, I had it. Or average volume. No, not that one. Oh, come on, don't do this. Should be, there we go. Here's the chart right here that you want to take a look at. So you see, instead of just taking a look at volume and measuring X number of shares today versus, a year ago, yesterday, instead I take a look at volume specifically inside the QQQ series as a percentage of the outstanding shares. Now you see a lot of different arrows on my screen. You'll see these black arrows on my screen that identify bottoms. You'll see that there's a upper and a lower threshold that I've created in the bottom of my screen. Now, what I did during that break is I just went ahead and updated this chart to reflect the potential 57 million shares of volume that the Qs might do, straight line math that we used out there. And I used what the percentage of outstanding shares was yesterday. And you can see we're up above a threshold level. The last time that the Qs were at this area, and I don't know what today's volume is going to be, nor do I know what the outstanding shares are. I won't know that till probably early in the morning. But you can see the last time was August 12th, when at least there was a bottom that came in. But now, when I say bottom, a bounceable area where price had held from. That's why understanding volume, it's more than just taking a look at the volume, understanding that things maybe move lower with volume just because of market behavior. At least that's Stevie's belief. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization automation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off to 227. S&P is down 27 points. So, if we go back to that 30-minute chart out here, and what you and I are doing live is we're just navigating these markets. We're looking for the signals out here. We take a look at that 30-minute chart. As we mentioned, coming into 130, we were in that seventh wave. Now the key is going to be, does that low get taken out? If that low does not get taken out, let me see what the low is. It's 4,400 even Steven out there. If that low does not get taken out between now and 2 o'clock, you will have a seventh wave confirmation. You also have price relative strength to the downside. Is that a confirmation of a turn, of a bounce? No. it's not a guarantee of anything. But we did have a nice little piercing candle during this last 30 minutes, meaning that price was able to close inside the candle more than 50% of the way inside that previous candle out there. Now what you want to see between now and 2 o'clock is a higher close out here, just to confirm that. In fact, your preference is to, I would say, at least get up to 44.25. Now you'd have resistance inside this trade at about 44.51 or so and change out there. Another thing to take a look at is really the 30-minute ES out here. And as I take a look at it, nope, that wasn't a chart right here. This is the line that for the day has been resistance. So in the Battle of Thermopylae out here, we know where the battle is going on, and it's a price level of 2049.47. That is a key level that the ES Mini has not been able to close above since 12 noon out here. So closing above that would then add to the weight that you're about to see at least some short covering rally or something, maybe a decent move. You know what happened yesterday in the markets? You know, that can repeat itself. But right now, what you and I know, we know the price is below those significant levels of support out there. Okay, let's move on and take a look at some other things. And I mentioned that the subscribers and I, we've been in the gold trade out there using similar patterns to what you and I have taken a look at. You've got gold up $25 right now, trading at 11.53. Got a nice wide-ranging bar, having taken out the B point of an A to B equals CD to the upside. Now that A point was all the way down here on the trading day of July 24th. My clients and I, we went long gold, I believe it was July 31st or August 3rd. I think it was July 31st was the date that we got the signal that we were looking for out there. And what we can see is that price now, and we'll go take a look at volume. We'll take a look at the GLD just to get a volume analytic for us. Price is now headed to 1161. You're at 1153. That should not be too much of a stretch. Then price ought to head up to about the 1175 area, and that'll take it to a 1 to 1.272 A to B equals CD. That doesn't mean that it has to stop there. That also happens to be the 0.618 retracement level. Now, if gold is doing nothing more than a some type of counter trend rally of sorts, it's at the 1172 area where you have your first Gartley sell pattern. You'd have a completion of an A to B equals CD, a 0.618 retracement out there, and just means continue to tighten your stops, in my opinion. But let's go take a look at gold. Now, gold typically makes a bottom every 13 and a half months, and that bottom usually that's scheduled for we're in it. We're a little bit past it. Should have been, a few days ago, and that's a fairly significant, but can be a fairly significant bottom that is in there. So just some food for thought as you take a look at gold. But let's take a look at the GLD. Let's take a look at the ETF. Get a feel for volume. Now, yesterday the B point inside the GLD was taken out. That was the August 12th high, which was out at 107.91. That was taken out with light volume. That was taken out with 7 million shares. Today, you're at 7.9, so you're going to have some additional follow through. You'd like to see at least a couple more million shares just to give it some nice oomph out here. With regard to where the GLD is headed to, really the same kind of a setup. You can take a look at your A to B equals CD pattern. You can take a look at retracements. If we look at the A to B equals CD pattern, our lightning bolt out here, that's going to give us a price objective. Well, the one-to-one's going to, you're basically at 110.79, 1.272, 112.01, 1.618 gets you up to the 113 area, and that is on the GLD. If we take a look at some of the equities out here, see how they're behaving. You've got Randgold Resources, 968,000 shares today. That is taking out a swing point, a B point. That's got 1.3 million shares from August the 12th. So you'd like to, looks to me like there's enough volume, should be enough volume to be able to exceed the 1.3 million shares. That would then give you a confirmed A to B equals CD to the upside inside of Randgold. If we take a look at those price projections, your A points down here on July 27th, B point out here on August 12th. Not much of a retracement out there, about a 0.382 retracement. Come on, what are you doing here? There you go. A 47% retracement. Actually, to be exact, that says your next price target $69.79 to $72 and change, and that is on Randgold Resources. If we go take a look at Agnico Eagle AEM, 3.7 million shares. The upside, you've got up $1.41. It took out a B point yesterday, August 12th. That had 5 million shares. Did it with 5.3 million. It was 5.3 going against 5.3. That works for me in my work out here. So that's got a nice confirmed A to B equals CD to the upside. In the case of AEM, Agnico Eagle, that says price ought to make its way up into a price objective of 28.44. That's stop number one. 29.79 becomes stop number 2. If we look at, so you can see the mining space, which was trashed. Everybody was talking about no way. It's turned out to be a nice trade area. And we also have to consider that every 13 and a half months, the mining, the metals typically, or silver, gold, typically makes a bottom. Doesn't always, but I will tell you that cycle low came in, about a week ago. Light sweet crude on the other side, if we go take a look at the October contract, up 36 cents, trade out at 41.63 out here. Got shellacked yesterday. By all measures, if we just take a look at expansions of swing points, that would be the March 18th low to the high out here on May the 6th. And what that tells us is it's exceeded the 1 to 1.618 expansion. That was at 41.76. Now you're trading at about that level right now. I'm no bullish reversal signal or anything along those lines. Certainly, it's been extremely oversold, but it's been oversold if we take a look at this contract since July the 6th. So you can spend a lot of time in a oversold condition. As far as where this really heads to, again, you go back short of some type of reversal signal. True reversal signal and some follow through on the next day. You just simply go, I would say, just take a look at the continuous contract. It's easier to do that. You and I have done this work. If we go take a look at it, I've usually put the quarterly, but we'll just put the monthly chart up on our screen. That says you're looking at about the 33.20 type area. That takes you back into the January 2009 levels. That's in the case of light sweet crude. Let's take a look at we could take a look at some stocks that are moving, but I think let's take a look at some stocks that are moving. Let's take a look at Priceline out here, $31 to the downside. You got Priceline, Amazon, Google, Regeneron. No wonder that the Qs are suffering the NDX 100. If we take a look at Priceline out here, makes a high, makes a 1-to-1 A to B equals CD, gaps up into it, wide-ranging bar, accelerated volume, 2.1 million shares on August the 5th. Been backing down in essence with no great volume. No real great volume. It broke out with 2.1 million shares. You've done 456,000 shares today. Very interesting. Now, it has closed that window. It repaired that window. That's no longer support inside of Priceline. If we take a look at daily profiles out here, it's a daily at back below the top of its box, the support area, straight right down to the point of control. You can make the case volume-wise that Priceline pulling back with light volume right into an area that it should find support in, which is 12.54. If it doesn't find support there, expect it to go down and test 12.14. Priceline is not the number one holding inside of the NDX 100, but we know that Apple is. So if we go take a look at Apple out here and go see what Apple is doing, let me get rid of this retracement ruler out here. Interestingly enough, Apple is, we've got our third test. Very interesting. Let me do this. Let me turn off our profiles. That way we get a little bit more space on my system. There we go. Turn that off there. Okay, good. We can see that price has been moving with less relative weakness out here. So that's very interesting. So in the case of Apple, here's what Apple is doing. Apple had, and Apple's got both it's got certainly the most bearish pattern, that island top from several weeks ago. So we've got that notated on the chart out here. But Apple broke out on January 28th, and did that with 146 million shares. Now, that gap becomes our friend because it's a real good line of demarcation for support, potential support, and it has held as support. And you've got really two different support levels. You either use the bottom of the January 28th area or use the high of January 27th. You're not really sure which one is going to be tested. Well, we do now because we've seen several tests of the area, and that is the high of January 27th. So 112.48 is a key level. And as we take a look at it, in fact, if it closes at 112.47 today, that level of support will be a little bit suspect. It'll say that that window, how I like to think of it, is the window's been repaired. The window's been repaired. You just simply, you don't worry about it anymore. But if this window is open, it's got sharp cuts for different traders out here. You don't want to get cut by an open window, do you? I don't want to get cut by it. And if we take a look at the moves back into this level, first time that was tested was August 5th, 99 million shares. The second time was 101 million shares on August 12th. Son of a gun. Today, 44 million shares to the downside inside of Apple. Lighter volume than the last two times, and way lighter volume than the breakout area from January 28th. You know, I think I know that I did. I erased the top 10 holdings inside of the Qs out here. I'll have to let me do this. Actually, yeah, I know there's another way that I can do it too. It's more accurate. Let me see. New. Oh, what did I do to do that? Oh, I know. I just simply have to go here to my partner links. Let me see what will come up. There we go. Let me put in the Qs out here. This will give me my top 10 holdings. So let's take a look at that. Let that populate. Because you and I want to go take a look at number 2. We know we've got volume inside the Qs. We know that you and I have done that little volume scenario as a percentage of outstanding shares. So we know when bottoms have formed. I don't know why this is not. There we go. Okay. So this ought to give me the top 10 holdings. So Apple is at 12.8% as of last evening. Microsoft is 7%. So let me go and put this on a different chart out here. There we go. And let's go take a look at... want to do that? Yeah, let's do it right here. Let's go take a look at Microsoft, see what it is doing. MSFT out here. And today's volume, we're not going to learn a whole lot with regard to Microsoft. Well, you know, in one sense, we're not going to learn a whole lot. Meaning that it's not really testing anything of significance. The last time that there was a test of significance inside of Microsoft was its breakaway gap, which was on April 24th, and that was 130 million shares, which was tested with 36 million shares. Today, price is just pulling back into its most recent swing point. Let's use that as a gauge, 30.1 million shares on August the 12th, and you're pulling back into it 19 million shares. So the number's 2 waiting inside of the Qs. Thanks for even asking me to do this out there. Light volume. Let's go take a look at number 3 out here. Where'd we go? Where'd we go? What the heck? Oh, it switched over. No wonder it did that. Okay. I know how to fix that. Okay. Q. Sorry about that, folks. It was linked. There we go. So number 3 out here is Amazon. Let's go see what Amazon is doing. AMZN out here. And then so in the case of Amazon, interesting. Amazon's got obviously several, well, not obvious to you, but now when we take a look at it, it's got really several gaps. We're not going to learn a ton about Amazon out here. Because what Amazon did a few days ago, July 24th out here, more than a few days, 22 million shares to the upside. And today you're pulling back, you're kind of inside that gap area with only 3 million shares. Even against August 12th, it's got similar type volume, I suppose. August 12th, 4 million shares. But Amazon is not exactly leading the Qs to the downside. Tom's got that great tool that tells you what's leading to the upside, what's leading to the downside. Let's go take a look at Facebook out here. Let's go see what Facebook is doing. Now, Facebook represents 4% of the NDX 100. FB is the ticker symbol. Let's go see if this is falling apart. It isn't. Okay, interesting. Very interesting. Let me see here. Come on, get rid of that A to B equals. Here we go. Okay. So in the case of Facebook, you get all these signs of strength area out here. So in the case of Facebook, that sign of strength was 54 million shares July 17th, and it was between a range of 90.86 to 92.55. And today, 28 million shares. There's no way that Facebook is going to, it's pulling back into an area where it broke out with light volume. That's the top 4 holdings, folks. That's Apple, about 13%, Microsoft, 7%, that's 20%, and these two here for almost 9%, 29%. 29% of the Qs, with regard to who's leading to the downside here, are coming back with light volume into breakout areas. Very interesting. Who said that? Schultz or Colonel Klink? I'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 216, S&P down 26. Thank you to Mr. O'Brien. He was able to, kind enough to hear the show and let me know that, let you know now that it's Netflix, Micron Technologies, and SanDisk that are leading the NASDAQ down I would assume that is point-wise out there. But during the break, so I'm going to try to put this together for you in the next. It's really all going to be about the close out here, but I'm going to give you what I think the market is communicating to you and I. If we take a look at here's SanDisk, by the way, on a weekly basis out here, and it looks like trash. It looks pretty toasty to me. It's below a swing point area back in July of 2013. Looks like SanDisk is going to make a run down into the 30 area out there. If we look at Micron MU, that doesn't look a whole lot better. This is a weekly chart here. I don't see anything I don't see anything necessarily stopping Micron until maybe $11, $12 out there, something like that. What was the other one? Was Netflix. Now, Netflix looks okay. So NFLX out here. Netflix looks just fine. That's the weekly chart. But the daily chart, what you'll see inside of Netflix, this had a breakaway with 63 million shares back on July 16th. So, today you're backing down with 21 million shares out there. Okay, so that being said, here's the other thing. So this is kind of an interesting chart out here. Normally, I look for it to go the other way. This is the equal weight. So this is actually confirming what you and I just took a look at. Where we looked at the weighting inside the NDX 100, and it's not communicating to you and I that it is ready to crack. It's not the one that's been jumping on board here. Of course, a question I've got to say, maybe we're not going to hit that 57 million share straight line number at the end of the day in the Qs. But if we take a look at the top portion of this chart, that's the equal weighted ETF. You can see that from an equal weighted standpoint, you're back below the July 8th swing point out here, equal weighted. But on the weighted side, which is going to have the largest impact out here, you were nowhere near the lows inside the QQQs. Now, normally it is the equal weight that does give you the and at this stage here, I'm just looking at this in reference as to where we're at out here. Normally, it's the equal weight that gives you the real indication as to what's going on out there. This does say there's trouble in River City. But I just simply will go. So it's going to be all about the close, right? We're at 156. So inside the NQ out here on a 30-minute chart, you've got a confirmed seventh wave to the downside, and you can see price just slightly higher out there. That's knocked it out of the park. But boy, the bulls, the buyers are trying to find some value, and this is where they are going ahead and they're taking a stab at the market. So it looks to me like what we should see by the end of the day is probably a push up into 44.54. Now, as it get pushed up there into 330 and then it gets pushed back down, I don't know the answer to that. But as we speak right now, it looks to me like the market is still trying to find some type of short-term bottom out there. If we take a look at, there's really nothing else that I could pin my hat to. If I had a hat, summation index, clearly it's moved lower, down below zero. So certainly sellers are in control here. It is not down to an oversold level. Where you would typically see bounces, either the New York Stock Exchange, NASDAQ Composite, or the Dow out here. So what they need is actually for sellers to just totally jump on and just push prices lower as we come into the close out there. So, folks, hopefully this has assisted you with understanding what's going on inside of the markets. There's a question out here that says XLK target. If we take a look at the XLK, she is trading below the August 12th swing point that had 10 million shares. You're doing with 7 million shares. The target inside the XLK, if it closes above 41.53, which has 9 million shares, it's going to bounce probably up into the 42 area. Folks, stay tuned. David White's going to be up next. Have a terrific Thursday, and I'll look forward to seeing you tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.